Although Australia and China are nearly 5,000 miles apart, the past 2 decades have seen the two nations become far more intertwined than anyone could have imagined. Each year, Australia exports around $200 billion worth of goods to China. Australia's growing reliance on China has been quietly undermining its economy impacting everything from education to housing. This might seem surprising at first after all. Australia's GDP per capita is 5 times higher than China's, but what began as a lucrative opportunity has evolved into a dangerous dependency on the world's second-largest economy. And over the past 20 years, more than 1.2 million Chinese citizens have traveled to Australia to study or settle down. At first glance, this partnership appears immensely profitable for both countries, generating jobs and fueling economic growth. In the year 2000, China began moving away from hardline communist policies and opening its doors to the world, welcoming foreign investment and encouraging private enterprise. This set the stage for one of the fastest economic transformations in history, lifting China from poverty to the ranks of wealthy nations within just 40 years. Yet beneath the surface lies a very different story. But China faced a problem. It lacked many of these critical resources. Cities like Perth and Brisbane thrived as mining hubs, creating thousands of jobs directly and indirectly through logistics and engineering. Unlike major developed economies like the US or UK, which rely heavily on services, Australia's economy remains unusually dependent on resource exports. Just 60% of Australia's output comes from services, far below the UK's 83% or the US's 70%, leaving the nation exposed to swings in commodity demand. While 2.8% growth isn't disastrous on its own, it's catastrophic for Australia, whose prosperity has depended on China's relentless appetite for raw materials. Exports are now expected to decline by $100 billion in the next 4 years alone, slashing Australia's export revenues by a quarter. Australia, however, was perfectly positioned to supply them. It's Western Australia, where over half the jobs rely on mining and nearly 80% of the mined iron ore is sold to China. Similar vulnerabilities exist nationwide, from dairy producers to wine growers. With some towns sending up to 70% of their exports to China, Australia faces losses 4 times greater, with devastating consequences for mining and agriculture, 2 pillars of its economy. Riding a mining boom that began in the 1960s and blessed with rich natural deposits and robust export infrastructure, Australia quickly stepped in. By 2024, over 1/3 of Australia's exports were destined for China, more than to Japan, India, South Korea, and even the United States combined. Since the 2008 financial crisis, Chinese investors have poured more than $153 billion into Australia, by buying stakes in everything from energy companies like EnergAustralia, which supplies electricity and gas to nearly EnergAustralian customers, to strategic assets like Port Darwin. Across the nation, entire industries and millions of jobs rely on Chinese trade. Currently, the country hosts around 820,000 international students, nearly a quarter of whom are from China. Given Australia's small population of 26 million, that means 1 in every 28 people in Australia is an international student. This brain drain undermines Australia's efforts to build a strong service-based economy to diversify away from resource exports. And services now flow back to China, enriching foreign investors instead of staying in Australia. As a result, more places go to international students, leaving fewer opportunities for Australians. As China's growth stalls, the government could see tax revenues fall by $8.5 billion per year, almost a quarter of Australia's defense budget. To fill the gap, it may have to raise taxes or cut spending, both of which would worsen economic pain as job losses mount and more people seek government support. At some top universities, international enrollment rates approach 45%, straining the quality of education for local students. Australia remains one of the world's wealthiest nations and has options, diversifying its trade partners, investing in new industries, and focusing on retaining skilled talent could help the country escape its dependence. With smart economic policies, Australia could chart a more stable future. Yet, given the choices of the past 2 decades, such a pivot won't be easy or likely without decisive action. Key assets like ports, mines, agricultural land, water, utilities, energy companies, and even state-sponsored schools are now owned by Chinese interests. is giving Beijing not only economic leverage, but also significant influence over Australia. Meanwhile, Chinese buyers dominate the property market, spending over $93 million every day on prime real estate. Just a few weeks ago, Chinese warships circled Australia, sparking alarm within the government. Depending on which news outlet you read, this was framed either as a serious threat or a routine patrol reminder of how Chinese power looms over Australia. Not just economically, but militarily. Nearly every part of Australian life, from mining and agriculture to education and infrastructure, is entangled with China. While this relationship has undeniably helped shape modern Australia, it has also made the country vulnerable, and the warning signs are growing louder. Job losses, budget deficits, and the erosion of control over critical industries. Chinese buyers invest upwards of $3.2 billion in Australian property each year, more than buyers from the next 10 countries combined. This flood of investment drives up property prices, making it harder for Australians to buy or rent homes. In Melbourne's exclusive Toorak neighborhood, for example, all major sales in the past 6 months went to Chinese buyers, pricing many locals out entirely. Today, Chinese influence extends into nearly every aspect of Australian life, even down to popular payment methods like Afterpay. But when it comes to Australia's economy, no tool can change the reality. As China's growth slows, Australia's over-reliance on its largest trading partner is becoming a glaring weakness. Australian universities depend heavily on Chinese students to remain solvent, while housing markets in major cities are distorted by foreign investment. But that's only the beginning. As China's economy slows, however, one thing is becoming painfully clear. This partnership hasn't enriched Australia, has left it poorer and more vulnerable. So how did things go so wrong? And is there still time for Australia to reverse course? The early promise of partnership at first, everything seemed to be going well. China's modernization created an insatiable appetite for raw materials: steel for its growing cities, coal for power, and natural gas for industry. The result was a massive economic windfall. Australia's GDP per capita soared, surpassing many of its developed world peers. For decades, this trade relationship only grew stronger. By 2024, more than a third of Australian exports were flowing to China. The slow shift to dependence. While this dependence delivered growth for years, it also made Australia uniquely vulnerable. Tools like ground news can cut through this media noise, helping readers compare coverage from thousands of sources and spot biases often hidden in headlines. In 2024, China's economy grew by just 2.8%, far below its historic double-digit rates. To put this into perspective, when the UK left the EU, it risked just 6% of its exports. The cracks begin to show if exports to China drop. Polls suggest that more than half of Australian companies would cut jobs, particularly in resource-rich regions like Pilbara. What once looked like a golden opportunity has become a dangerous trap. A housing crisis fueled by Chinese investment beyond trade. China's economic boom unleashed a new class of investors seeking safe, profitable destinations abroad, and Australia became their prime target. This influx of Chinese money has made it nearly impossible for ordinary Australians to escape Beijing's influence. Profits from everyday goods and real estate. The impact has been equally dramatic. Education paradox. Australia's top universities, meanwhile, rely heavily on international students, particularly Chinese students, to stay afloat. These students pay up to $50,000 per year in tuition, over 3 times what Australian citizens pay, creating an incentive for universities to prioritize foreign applicants. Or still, nearly 90% of these international students leave Australia after graduation, taking their newly acquired skills home. The government's reliance, even Australia's government, has grown dependent on China. Tax revenues from exports to China have funded healthcare, education, and the military. This double blow of falling revenues and rising welfare costs threatens Australia's economic stability and could plunge the country into recession after decades of steady growth. A path forward, what began as a seemingly perfect partnership, has left Australia dangerously exposed. But all is not lost.